Ever wondered how you could take your trading game to the next level while cutting down on fees? In today's video, we're diving into some powerful trading tools that can make all the difference: skilled orders, chase limit orders, and the ever important distinction between limit and market orders. So let's go. If you've been trading for a while, you're probably familiar with limit and market orders, but do you know that trading with market orders typically results in higher fees? That's because when you place a market order, you're taking liquidity from the order book and exchanges charge you for that. On the other hand, with limit orders, you're acting as a market maker, adding liquidity, which means lower fees for you. So by strategically using limit orders, you can save a significant amount on fees. But here's where it gets really interesting. Have you heard of chase limit orders? This is a feature you won't often see across exchanges, and it can be a game changer for your trading strategy. Normally, when you place a limit order, you might have to wait a while for it to be filled, especially if you're placing it just below or above the current price. With chase limit orders, this process is automated, saving you time and money on fees. It's a powerful tool that allows you to lock in lower costs without the hassle of manual adjustments. By the way, if you think this sounds like a game changer, comment below. But only if you're not too busy chasing down that perfect trade. No one likes a missed opportunity. Throughout this video, I will walk you through how to use these tools effectively so you can start saving on fees and improving your trading performance. No extra effort required. Ready to take control of your trades and keep more of your profits? Let's jump in. Have you ever wished you could trade more efficiently and cut down on those hefty fees? Well, today's video is all about how you can do just with two powerful tools: the chase limit order and the skilled order. Let's break it down. Normally, if you want to enter a trade, you would use a market order, but you are hit with high fees. The chase limit order, however, automatically places your order just below above the current market price. As the price fluctuates, the order follows it, and when it hits your desired price, it's filled as a limit order, saving you big on fees. For example, let's say Bitcoin is at $28,358. With the chase limit order, you set a limit below the price, and if Bitcoin moves up or down, your order follows the action and fills when the price comes back to your target. This means you get it at a better price, all while paying way less in fees compared to using market order. Next up is the skilled order. This one's super useful for buying or selling altcoins when liquidity is low. If you're placing a large order, this still splits into smaller pieces to avoid slippage and price fluctuations. So if you're trading big amounts, this helps you keep things smooth and efficient. Both tools are easy to use and can save you a ton of fees, potentially hundreds of dollars each month. If you're looking to take your trading to the next level, these features are definitely worth checking out. Bybit has introduced a really interesting feature that might not be for everyone, but it's definitely worth knowing about: the ability to set price grids for your orders. This allows you to automatically place multiple orders at different price levels within a defined range, which can be a game changer if you are looking to automate entries at certain support levels or price zones. To find this tool on Bybit, simply log onto your account, navigate to the Trade tab, and click on Tools in the menu. Under this section, you will see the option for grid trading, which is where you can set up your price grid orders. You can choose the price range in which you want to place your orders and define how many levels or grids you want to create. Let's say Bitcoin is fluctuating around 100k and you think a strong support zone lies between 97 and 95k. Instead of manually placing multiple orders, the price grid tool lets you set this up automatically. The system divides your total order into smaller ones, each at a different level within your chosen range. For example, if Bitcoin drops to 96, you will have a long position waiting even if not all your orders fill. This eliminates the need of constant monitoring or manually adjusting your orders based on price action. If you think this is cool, go ahead and hit that like button. Don't make me chase you down for it. The real magic happens when you're able to fine-tune the order amounts based on your strategy. Let's say you're more confident in a price drop and you want to buy more Bitcoin at lower levels. You can adjust the grid tool to allocate more capital as the price moves downwards. For instance, instance, if Bitcoin is trading at 100k and you think it will drop to 96k before bouncing, you can set your grid tool to allocate more capital to the lower price levels, 97.5, 96.5, and etc. As a result, you will have more order at the levels you expect the price to hit. Alternatively, if you believe Bitcoin might continue to rise, you can adjust the grid to allocate more capital at higher price levels. For example, if you think Bitcoin might break past 100k and raise to 105k, you could set the grid to have smaller positions at lower prices and larger positions at higher prices so you catch the upside momentum. This feature is fully customizable and you can set up to 10 different grids. You can also choose to have the system apply an increasing or decreasing order ratio depending on how you want your trades allocated. In an increasing scenario, the lower the price, the smaller your orders, while in decreasing scenario, the smaller your orders are placed as the price goes up, giving you more exposure to lower levels. This is especially useful if you want to scale in or out of positions without having a large order impact the market. So another advantage of using grid orders is that it reduces the chance of slippage, which can often happen when placing large market orders, especially in volatile markets. By breaking your big order into smaller ones, you avoid the issue of a single order moving the market or not being filled at the right price. Grid orders are ideal if you're planning to trade ranges. For example, if you think Bitcoin will move within a certain price band of a few days or weeks. It's perfect for a long-term strategy, especially if you're unsure about where exactly the price will reverse, but you're confident it will hit certain levels. So whether you're looking to accumulate Bitcoin in a support zone or take advantage of a breakout with minimal slippage, the grid order tool on Bybit is incredibly useful. It takes the guesswork out of entering positions at different price levels, helping you to automate your trades and stick to your strategy without having to constantly monitor the market. This is a powerful tool for those who want to automate entry at strategic levels without worrying about timing the market perfectly. Plus, it's an excellent way to manage large orders by breaking them down into smaller pieces, preventing slippage and large price fluctuations. Bybit is making this available at a time when many traders still rely on market orders and pay hefty fees as a result. With tools like the chase limit, order, and price grid functionality, you can significantly reduce those costs and save hundreds or even thousands in fees every month. If you found this guide helpful, make sure to leave a thumbs up. If you have any questions or need further clarification, drop a comment below and I'll be happy to help. Don't forget to subscribe for more tips and tutorials, and for those of you who don't have a Bybit account yet, check out the link in the description to get started with these tools today. So happy trading, bye!